Hello traders, Cory Mitchell here. I want to talk about day trading the Euro USD based on price action or price structures. We're going to talk a little bit about both. This can be applied to really any pair. I mostly day trade the Euro USD, but if you do find a nice price structure, you can definitely use it to turn into a day trade. So with a swing trade, we're typically holding those trades overnight. We're maybe dropping down to the 5-minute chart to find our entry, but we're really looking at big targets. And so let's look out at the hourly. This was related to an article I wrote today, Euro USD short-term bottom. We had this big ascending channel. We were right at the bottom of it, so I was saying, hey, maybe we're going to pop back up here. And then the 15-minute chart showed this bottoming price action there, so we were looking at going long. And that was a day trade, or at least for me, it was a day trade in this case. And so this was the hourly chart. We've recognized our price structure, and maybe we don't want to hold this overnight. Maybe we're looking for a target up here near the top of the channel or these prior highs. And in this case, we hit it, but if we don't want to hold overnight, maybe we would drop down to a 15-minute chart. And let's throw the sessions on here. So I really only trade during the US session, which is the green one. And when it turns to blue, that's when London closes. And then just the US is open for the blue part here. So this occurred right in my wheelhouse, and was looking for some potential upside. So the 15-minute chart gave us this. We could have looked at these prior highs as a swing trade. And then, of course, you can drop to lower time frames if you want, the 5-minute or the 1-minute, to... Oh, let me go back far enough to get our channel. No, but we know that this, when we pull back, this is occurring right near the channel. Maybe I'll let us see it on the 5-minute. There, we can see it on the 5-minute. So yeah, as the price pulled into this area, and again, I'm only trading during the US session, but if you were trading during the London session, you could have also seen that it was coming into a potential area. So then we'd start to look for opportunities to buy. So here is the first one. 1, 2, 3 bars. That's kind of the minimum consolidation we'd look for. Usually 4 is a little bit nicer, gives you a little bit more time to act. We are using a 5-minute chart, so this still would have taken 15 minutes. You have some time to assess the situation. And so that could have been the initial long there. Looking for a move up into, this is the smallest channel we have if we connect all these highs. So if we look for a target maybe just below there, about a 3-to-1 reward to risk, a little bit more. And that's likely going to take maybe a day or two. If you want to turn it into a day trade, then you can definitely do that. Just close it out at the end of the day. We had the other opportunity here where the price pops up, forms a little wedge here, a little easier to see on the 1-minute chart. And let's talk about price action for a second here. So this was the first, the biggest wave up of this decline happened here, right at the end of the London session. That was a tip-off that potentially the downtrend was in some trouble. Small waves down. This whole thing is much smaller than this move up. Then we have this big blast off. Big move down though, that kind of neutralizes it again. Bigger wave up, smaller wave down, slightly higher low here. Move back up that almost equates to that one, but not quite. But then we get here and stall out and then start moving back to the upside. So at all points you want to be thinking, if the price goes down or up, what am I going to do? And since we had a bit of a context in mind from our hourly chart, we could have been thinking this was a bottom. This is a head and shoulders pattern, and a lot of people would be thinking negative, negative, negative. But when head and shoulders patterns don't work out, they run back toward the head. And that's exactly what happened here. You have a right shoulder that stalls out, a complex right shoulder that stalls out. So there was 2 bars here only, so not much of an opportunity to even think about buying on the breakout to the upside here. But when we take out this little trend line that we've drawn, that indicates better or a more concrete reason to get long, since we didn't have the consolidations. This was basically my next best entry, and whether you're looking at the 5-minute, 15-minute, or the 1-minute, this was a good entry here, starting to show some bullish price action. And initial target trading on the 1-minute, I'd be maybe looking for just a move up into here, whereas if you're looking at the 15-minute chart, then you'd probably be looking more up in here. So a bit bigger move, 1 trade for the day pretty much, whereas with the 1-minute chart, you can still trade off that pattern. Maybe you saw that bottoming pattern on the hourly, or maybe you didn't even look at it and you're just looking at this. But either way, your next target's here, and then you know the highs of the days are up here. Price action unfolds, gets really choppy. This was basically the opportunity to stop you out if it was going to, but it would not have. One thing about if you're trading on the 1-minute chart, if you're going to trade the bigger patterns, 15-minute chart, hourly chart, you're going to see those bigger risk rewards, which we talked about in the price structure video, especially if you're looking for entries on the 5-minute chart. With day trading on the 1-minute chart, since we don't really have any more time frames to drop down, I'm typically going to get out near recent highs and lows. That's going to drop the risk reward. Usually, I'll trade anything between, as long as it's a little bit better than 1, or I think it's better than 1, I'll trade it. But ideally, 1.5 to 2.5 to 1 is kind of where most of the day trades land. Occasionally, you'll get a really big one where you just have a tiny little consolidation. It's maybe like a few pips. And you're like, if this thing breaks out, it's probably going to run like 20 pips. In that case, because there's just nothing around, maybe in this case, like a case like this here, if we would have had a tiny consolidation here and then a breakout, then you have 10, 15 pips of upside with maybe only 2 or 3 pips of risk. That would have been a high reward opportunity. But most day trades on the 1-minute chart are going to be 1.5, 2.5, maybe even 1.25. So don't get too worried about the risk reward. We're trading more based on the price action. So this breakout here, we had the big pullback, didn't stop us out, but then it stalls here. This is likely an area I'd just get out again. And we just erased the prior down wave, so I wouldn't be looking to go short here again. Plus, we're still above the last range, so we basically moved from one range, this range, into another range. And since we haven't dropped back into that one, it's not necessarily bearish. And then it's just looking for the positive price action again. I've started to see some ascending lows here. We have a tiny channel down, and start to see this green bar up. That no consolidation again, but we do have what I call a little mini channel. And we break out of that. You could just wait till the close of that bar. But basically, as soon as you see that that little mini channel is broken, we're probably heading back up toward these highs. And since we're so close now, and we are in these ascending lows, maybe it would stall out again. In that point, we could just get out again and then buy a breakout if it happens. But in this case, we're getting so close to these highs that if we start getting close to them, we probably will push through them. And then we're so close to these highs that we'll probably push through those ones as well. And that's exactly what happens. We pushed a bit above them. Okay, but let's go back. I'm getting ahead of myself. So here, green bar, potential entry there. Not a great reward to risk if you're looking for a target just near these highs, but still greater than 1-to-1. You'd have to eyeball that. There's no, if you try to throw this on your chart, you're not going to get in and you're going to miss it. So it's just like, okay, if I buy here, yeah, I got this much room to profit, stop loss goes down there, and it's just you take that trade. You know that you have some decent looking profit potential versus some risk, versus your risk there, and you take that trade, and potentially you'll have lots of those each day. Some you'll win, some you'll lose. But unlike the price structures where we're probably going to win less than we're going to lose more than we win, but we have huge reward to risk, with day trading, our reward to risk is a little bit less. But once we get good at this, we should be winning at least 40, 50, 60% of our trades. And as you get better at the price action, 60% winning 6 out of 10 trades, quite possible. So even if you're trading 1-to-1 reward to risks, ideally a little bit more, you can still be profitable. Yeah, so the price does stall out here right again. Definitely could have just taken a few pip profit here, or maybe a 1 pip profit, and just gotten out and then said, okay, if it breaks above these highs, then I'm going to go long again. And that could have very well happened again. Target still up here, so again, you're getting down into really small profit potential here, but still options. So you got to decide what kind of trader you're going to be. If you're going to be in and out all the time, getting in and out on every consolidation, or if you just let this play out to your initial target. I'm a little bit of both, but I'm always kind of weighing the risk reward. So if on this one I got it here and I let it run all the way up to here, it was just kind of like a one and done sort of thing. But other days I'm, because I had a busy day today, but other days I'm quite active in this, and yeah, once we see the price stall out, just get out, wait for another entry point. Here we're starting to see this price really consolidate. So we're either going to see the hard break lower below basically this trend line here, but all these ascending lows here, or we're going to see the breakout above that. And we saw that. Next entry point, we had broken that high, but then pulled back. But we didn't really pull back much. We're still along a rising trend line now. We consolidate. Remember, we're usually waiting for at least 4 bars. 1, 2, 3. So this kind of wild green bar was our third one. Then we have 2 more price bars after that. Once we've kind of had if we've had those kind of whipsaw movements, then you can look at the inside bars for the breakout. You don't have to wait for this whole range to break out, or at least I don't usually, because it kind of unnecessarily makes your stop loss bigger. Because if it can break, if you have 2 bars that are moving sideways and the price breaks above this, it's probably going to reach this point anyway. Or if it drops below this point, it's probably going to reach this point anyway. So either way, you know that if it breaks above here, it's probably running, and if it breaks below here, it's going to run. But you can kind of assume that you're getting to that point anyway if we break this smaller consolidation. So we had 1, 2, really 3 bars that move sideways here because the breakout didn't occur till this one, and then the long trade there. And for this long trade, the target was the highs of the day if you kind of wanted to have a place in mind. Otherwise, as I mentioned, there's lots of ways to get out. You can use a 1 bar trailing stop loss where the price just moves behind the close of each bar. So here, 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 here. So eventually you would have got stopped out right here because you would have put your stop loss below the low of this red bar and it would have dropped. Or you would have just got out in your target range here for the day up near these highs. I kind of drew it here between about 22 and 28. And then, yeah, the price action just keeps going. A bit of a bearish move here. It was into the trend line. 3 bar consolidation, but really we had a couple here. This is like a little bit of a push lower and then up. So this was a potential trade there. We also had one here, the little channel breakout again. This run up eclipsed this high channel breakout. Once we started to see this green price action coming in, could have bought stop loss below, target rate near those highs again. We ended up eclipsing them a little bit. But yeah, an opportunity to grab an extra bit of profit there. So that's how you can combine all these different time frames, how you can day trade while still looking at hourly 15-minute charts, dropping down to maybe the 5 or 1 minute chart for really precise entries, or you can just trade the 1 minute chart if you like. But it's looking at price structures. No matter how you're doing it, you can adapt it to the time availability you have to trade, the risk rewards you want, how active you want to be. It's a very adaptable strategy. And then with price action, on the 1 minute, you can use price structures as well if you want. There'll be price structures that occur on the daily, but typically we're just going to be looking for the swing highs and lows, how they compare to each other. And then you'll start to see the trend lines and stuff within the daily as well. So until next time, happy day trading.